A brand spanking new trader takes center stage in this video and gets grilled as to whether he made a quality professional trade that will lead to consistently profitable trading. Admittedly, we didn't expect this review session to go very well for this young trader. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, a proprietary trading firm located in New York City, and the author of the trading classic One Good Trade and the Playbook. Founded in 2005, S&B Capital trades stocks and options and futures and crypto, both as discretionary and automated traders. Let's have some fun and see how this beginner trader does in the trading review of his changing fundamentals trade. Oh, and pay special attention to how this newbie tries to slip something by me and doesn't get away with it at all. All right, Tony, why don't you tell us a little bit about who you are and how you got here and sort of where you are at this stage in your trading career?
Sure. Well, I'm fairly new. I came across S&B about 2 months ago. I was doing some day trading with my personal account for the past couple months. I realized that it was not correct. It was not sustainable. And as soon as I saw S&B, I recognized this was the place. This is where I need to be. So I signed up for the in-house foundation, and I'm in here in New York City doing the course for the month.
So you are fairly new to trading, and you are an S&B training student. Fair?
Yes, very new. I mean,
all right.
If you really want to be real about it, I've been trading for like 2 weeks, 3 weeks.
Okay.
I wouldn't call it what I was doing before.
So we shouldn't expect this to go very well.
Yeah. I'm a fast learner. I've been told I'm a fast learner, but
so
hey, I can only get better.
We'll grade you from 1 to 10 on this.
Absolutely.
And we don't expect high scores. Look,
hopefully don't go easy on me though.
Hopefully by the end of your time with us, the scores will go up. All right, but that sets the context for who you are and where you're at in your trading career, and we'll go from there. So what trade are we looking at?
So we are looking at a changing fundamentals day 2 news catalyst in Novavax. I was not in this trade as I was trading I was in another trade that day that actually had the same setup. But I decided to playbook this one because it was a lot more exciting than the actual trade I was in. So big picture for the market, I just wanted to hit on the world news. China's COVID lockdowns are having a negative impact on the markets, and inflation continues to make new record highs, causing volatility in markets around the world. As for the US news headlines that day, the CPI report is due out tomorrow. The January 6th committee is holding its first hearing that night, and the White House is set to announce a COVID-19 vaccine rollout plan for children under 5. And I really thought this was interesting because here we have companies like Moderna and Pfizer, Johnson & Johnson, that have had vaccines out for the last year and a half, I think, and they're at children under 5, and in this company Novavax, they're looking to just roll out their first COVID vaccine, and they're for 18 and older. So they're pretty behind the ball here. Overall market sentiment that day, the SPY initially tried to rally, but US stocks ended up falling for a second day with growth concerns in focus after Europe's central bank became the largest to signal restrictive policies to combat inflation. Selling accelerated in the last hour of trading, with the SPY closing down 2.4% in the biggest one-day drop in 3 weeks. The market is really waiting for the CPI numbers to be released the following day, which will have major influence.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So here we have the SPY big picture. You can see this is for the past couple days, past I believe this was the past 30 days. And you can see SPY is trending down in that channel and then trends up, back up. But more importantly, right before the trade, you have the SPY is consolidating for 8 days. And on the day of the trade, SPY breaks that consolidation at the bottom of the channel, which basically puts the wind at our back for this trade. Here we have market big picture for the day. As you can see, everything's pretty weak. SPY is failing to hold VWAP. It's basically trending below VWAP, tested a little bit, and then eventually fails. Same thing with Qs. You can see the VIX is there. At 1 p.m., finally catches a bit and goes up as the market's failing. As for the ticks, we really don't see anything. A couple over 500, but pretty low that day, and IWM weak as well. So then I want to include a big picture for the sector. Here you see XBI, and you can see right here, the biotech sector is trading in a channel. It has a failed breakout into that resistance and then starts trending down. So that failed breakout into the resistance happens the day before the trade. So we are trending down now for the day of the trade. Another check in our favor with the wind in at our back. So here we have charts for just a little bit close up that day, big picture for the sector. You have XBI on the left, and then I want to include Johnson & Johnson, which is basically the head of the snake for, just for reference. Again, you can see everything just very weak in the morning, failing VWAP early. So weak it doesn't even retest VWAP later on the day.
Let's give you a score for your big picture. I actually thought this was really good.
Thank you.
A couple of things to think about. I would have loved for you to have mentioned that there's a war going on between Ukraine and Russia, and I would have loved for you to have added that oil is quite high. So that's something I would have put in there. You did a really good job. Can you go to the next slide? Pointing out that we are breaking down from that channel there in SPYs. That is super important for how anything's going to trade. And this is why we actually start with the big picture, which is that if we're going to break down from a consolidation area, that means that more of our shorts are going to work. That means that less of our breakout trades are going to work. And so if you're going to lean on something, I don't know how you're going to trade. I think I know how you're going to trade. But if you're going to lean on something on the short side, way more likely to work when SPY is showing weakness. Not just intraday, but when we look at our daily charts. So that was really good. You did a really good job pointing out how the sector was doing overall, and again showing us a channel that's breaking down from there. You did a really good job going to look at a competitor and using that as potential information for how this might trade. So very good. I'm gonna call that a 9.2 out of 10.
For our intraday fundamentals, our vol is 22.
Whoa, don't see that every day.
Yeah. Average volume, 7.1 million shares. Float of 75.9 million. Institutional ownership of 43.67%. Short interest of 15.8%. We have an ATR of $6.80, and the stock is gapping down 5.17%. And that we have our major news catalyst. And I will get further into the news, but I just want to put this in here because this is our major intraday fundamental. Reportedly, the US FDA's decision on Novavax's COVID-19 vaccine may be delayed for review changes in manufacturing before deciding whether to authorize the vaccine. So the big picture in Novavax, Novavax is a biotechnology company that addresses serious infectious diseases globally through the discovery, development, and delivery of innovative vaccines to patients around the world. Their vaccines include seasonal flu, MERS, SARS, RSV, malaria, and Ebola, which are basically all respiratory viruses. And among the 449 stocks in the biotech industry, Novavax is ranked 139. I list this because it plays a pretty big factor in that, their main source, their only basically source of income is these respiratory vaccines. And here you have COVID, which is the biggest vaccine that they're coming out with, and they're basically dropping the ball. Novavax last reported earnings on May 9th, 2022. The company reported Q1 beating earnings by 7 cents. They missed on revs and reaffirmed full year 22 sales outlook. So a couple days before, on June 3rd, and I wanted to include this because it plays into the whole big picture. Novavax informed the FDA of changes to its manufacturing process just days before the agency's committee was scheduled to review the vaccine. It kind of flew under the radar. You really don't see the stock reacting to it. And the day before, well, actually 2 days before, we'll get into this, on June 7th, the committee under the FDA Advisory Committee, the Vaccines and Related Biological Products Advisory Committee, voted 21-0 to recommend that the FDA grant emergency use authorization for the Novavax COVID-19 vaccine for individuals aged 18 years and older. The FDA is not obligated to follow the committee's recommendation, though they normally do. And that leads us to our June 9th news catalyst, which happens the day of the trade. Reportedly, the US FDA's decision on Novavax's COVID-19 vaccine may be delayed to review changes in manufacturing before deciding whether to authorize the vaccine. Here we have a big picture of how Novavax has been trading for the past year. And then you can, at the top, and then you can see on the bottom, Novavax has been trading for the last month, the last 30 days in this channel. And you can see right at the end, we are right at the bottom of the channel, the day that this is going to be trading.
Let's stick with intraday fundamentals. Minor point, and you're not getting downgraded for this. I always like to just put that in red. When you get something real good, I like to put it in green. When you get something real bad, I like to put it in red, just for record keeping. When you go back and study these, I think that's a good visual. I'd love for you to add VIX for the day. So what was the VIX reading on this particular day? That's something always good to be putting into your playbook trades and going back and tracking that. So if VIX is 25, we're going to expect the stock to trade a certain way. If VIX is 15, we're going to expect the stock to trade a certain way. If VIX is 12, those are meaningful differences. So get into the habit of tracking the VIX on the individual day. What I really like so far already is that we've got, when you looked at the big picture, we had something pretty significant, which is we broke down from an important channel. That's significant. Like, we're below an important level in the overall market. Everything ought to go down. And then what I like about this is a significant catalyst. These are the catalysts that really can make stocks plummet. They make a product, the market expected them to make money with this product, they're not going to be able to sell it for the near term. Perhaps worse. Market's not going to like that. All right, so, and that's easy to understand. All right, so we all can understand that. They make a product, the market expected them to make money, they're not going to be able to make money. The market's going to punish them for that in the short term. All right, so we've got a really good technical level with SPY, and we've got a really good technical level with XBI. We're below each, and we've got a really negative news catalyst. This is what we do here. This is a good trade. This is a minimum trade of the week opportunity. Minimum trade of the week catalyst. All right, so good job with your intraday fundamentals. We're gonna bring you in at 8.5 for that. Please add VIX next time. Thank you.
So here we have, again, I wanted to really give the backstory on this because it does play a lot into the day of the trade. So this is for the entire week that the stock trades, and if you notice, it looks a little off. Tuesday morning on June 7th, NVAX trades from 4 a.m. to 7 a.m. and then is halted on news by the SEC and does not trade again until the after hours that day once it's unhalted at 5 p.m. At 5:07, the news regarding the committee's vote the vote is released, at which point NVAX jumps from 47.36 all the way up to 59.38, but fails to break the $60 resistance with such light volume. The following day, on Wednesday, June 8th, Novavax starts to sell off as buyers are now trapped, shorts are taking positions, and the market itself is down in pre-market. Here we have, this is what I use. I have an app on my iPad, and my iPad basically never leaves my side. And this is what I have as my trade checklist for determining risk. So every time, before I'm about to get into a trade, I see this, I have my game plan, and I know my setup. But just as I'm about to get into my setup, I go down my checklist and make sure that to basically see how many checks I have in my favor. So here we have the market is trending in the same direction of your news catalyst. Super, super important. Actually, Lance Breitstein was one of the people that taught me that. The ETF is trading in the same direction. That's another check in our favor. I always pay attention to the measurements of the movements and the consolidation, as they tend to be equal in length and time. The stock is trading above or below VWAP, so basically you want it to be trading in the same direction as your stock. I learned that from Shark. The green and red volume bars that are in your favor, so if you are short or you are selling, you want to see red volume bars, higher red volume bars, or opposite, if you're buying or long, you want increased green volume. Candles are closing below the 9 and 21 EMAs, so I use the 9 and 21 EMAs on my charts for entry, for trade management, and for closing out my position. Stock reacts to support resistance levels in your favor, so basically give you confirmation to get in the trade. And in this case, we have we're shorting, so I'm looking for lower lows and lower highs.
Yeah, and so stock selection is one thing we're going to grade you on. Great stock selection, perfect stock selection, spot on stock selection.
Well,
did you want to say something?
I have to be honest. I was not in this stock.
Okay.
Yeah, but I was in a different stock that day where I had everything planned out and ready to go. And actually, it was a wedge play as well, and It worked in my favor. But I did decide to choose this because it just is a lot more exciting, and I am going to show you how, if I was in this stock, how exactly I would have traded it. I'm not doing like a best case scenario. I wanted to apply my my process to this, and that way I can get your feedback as to okay, yes, it worked in this case, but maybe it's not going to work in another case, and because that's what I'm really trying to work on right now. What process?
And particularly at the beginning, you want to do playbook trades on the trades that you were in, that were A+ trades, and build your business around that. Something that really made sense to you, something that really worked, and then something that you just saw could be something that could really work for you. At the beginning of your career, perfectly fine to be playbooking one of those trades, even if it's a hypothetical. So overall stock selection, 10 out of 10.
But I don't know if we can say that, because at the end in my trade review, stock selection is my criticism to myself, because I feel like I missed it.
Yeah, I understand you missed it. If hypothetically, if you two have traded this, this is the type of stock you want to be in for all of the reasons we've talked about.
Yes, and the reason I actually decided and felt that this was okay to do is because this wedge play is my A+. I actually spotted it today when I was in Microsoft, and it was right before it started taking off at like maybe 3:30, and I got in and loaded it, and and I was able to go from red to green on the day. So this is like my play, and I'm trying to look at it from all aspects so I can really master this play.
Good. All right,
and then move on to my next. Okay, so trade management. Here you see the stock opens up. It hangs around VWAP and then fails. And then you can see it starts to form a little wedge. That's about 30 minutes that the stock is starting to consolidate. As it consolidates and as soon as I spot the wedge, I start to form my game plan. And once I do spot the wedge, I start basically planning out my entry, my stop loss, my trade management, and my exit. And I start planning out my if-then scenarios. So basically, if the stock breaks in my favor, then I'm risking this much. If price breaks against me, and in this case, I would have my stop loss at 48, which is basically right above the first large candle that starts forming the triangle. So there at 48, that's when I know I'm wrong and I'm hitting the bid and closing out my position. If the candle closes, and now once I'm in the position, if a candle closes above the 9 EMA, then I'm taking some off. And if a candle closes above the 21 EMA, then I'm closing out my position. That's how I have been trading, and it does seem to work for me. It's been working well for me so far. And I do trade on a 2-minute bar chart. That's also something Lance Breitstein taught me. It kind of just smooths it out. And I really like it because with a 2-minute chart, you're getting more of a confirmation once the candle completely clears the 9 and 21 EMA. And same thing for when it trades above the 9 EMA or the 21 EMA to close your out position, that the move is over and it's time to end it and not hang on. So for the first one, you can see we're about 30 minutes in as Novavax starts to consolidate and form a small wedge. This is my A+ setup. So I would short 2 tiers here. Once the pattern is broken with a confirmation of volume coming in, and I would risk, because this is my A+, I would risk 50% of my daily stop loss, keeping my stops tight at 48. The stock breaks the pattern, as you can see at the bottom, and I have the arrows there in red because we are negative and short selling. So with the 48 as my stop loss, I would look for at least a 3-to-1 risk to reward ratio, and that puts me right at the $46 price level. So 46 is significant as it was the low of the day support from the previous day, and it was the pre-market low. And I would look to take off at least 1 tier here, expecting it to bounce or consolidate or just hang there, but as you can see, it slices right through the 46. Volume is still elevated. It's nowhere near the 9 EMA, and this is where I would add a 3rd tier. This is where I would get in. Everything's going in my direction, and now basically I'm just hanging on, and I am waiting for the first candle to close above the 9 EMA. As you can see, we trade 43, we bounce a little bit, and then we have our first candle that closes above the 9 EMA, and that's where I'd cover 1 tier to lock in some profit. I'm still holding 2 tiers as none of the candles have closed above the 21 EMA. As you can see, they're on the line, but for me, kind of like sports, if it's on the line, it's in. So I'm still holding my position, but I am watching every candle very closely. And as soon as that candle does cross the 21 EMA, then I am closing out the balance of my position and my trade is over.
So you're making a trade decision at yesterday's support, day 1 support, at that 46 level?
Correct.
Okay.
That was it was important. It was, like I said, it was the low of the day support and pre-market. So that to me, plus that was also my 3-to-1 risk reward ratio. So I had my eye on that. I would have my eye on that.
Okay, so you didn't cover though. As I'm reading your notes,
no.
It goes to 46, which is support from yesterday, after it's moved down to $1.50, and you're not making a trade decision to cover any, even though yesterday was support.
I would be looking to, but just because I have so many things going and it doesn't even,
Yep.
It just slices right through it. I mean, there's no hesitation.
There's definitely a trade decision there, right?
Yes, absolutely. Absolutely.
Okay, I understand your trade management. All right, let's talk about reading the tape.
So here we have the tape of Novavax on the day of the trade. As you can see, you do have the wedge forming. Volume is just, it's not anything great, but you can see everything's kind of condensing, consolidating, tightening up, and this is where I am ready to pull the trigger. So there's a first move down that's kind of significant, and you'll see the tape start to speed up. Bids are being hit.
So like if it gets below 48.25, that gets your attention.
Yes. And you'll see the volume really increase.
All right, it gets below the 25 cents, and then it doesn't get above it, and then it makes a low below that 15 cents, right?
Correct. And it's pretty consistent.
So it doesn't really get back above that level that you thought was important, and then it gets below that 15 cents, which is good. And now we're really starting to move away from price. Bit spready, huh?
A little bit.
Yeah, so that 48.25, I don't want to see that. I don't even want to see it get above 48.15.
It doesn't. And as you can see, the 9 and 21 EMAs are crossed right above it. More confirmation.
Hanging in there a little bit, right? It's hanging in there a little bit.
Yes. There's never any major down moves.
Yep.
It's just pretty consistently just trending down there, but there are no green candles at all.
So where are you wrong here? So, you're shorting below that wedge. Like, where are you wrong? Are you wrong above 48.65? Are you wrong above 48.50?
So my stop loss on this was, well, let me find it. My stop loss was 48. I entered it at 47.50, and I gave myself 50 cents, looking for a $1.50 move down to the 46. I think it was 46, right? Yeah.
You got short. So tell me again where you got short. Bring up that wedge again from the chart that you showed.
Right, once it breaks the wedge, you see the pattern, that candle?
Yeah.
That's where I would get short, and you have the volume coming in below.
So that's at that 47.50 area?
Yes.
That tape didn't match up to that. That tape was breaking below 48.25, right? We didn't see anything below 47.50.
I think that's, so it's not my tape. I did get that from Jonathan, and he has it on a 1 minute, the tape on a 1 minute chart. And I think that's why the difference, where this is a 2 minute candle chart, that's where you see the difference.
Yeah, but what you're saying is it's significant when it gets below 47.50, right?
Correct. Yes.
Based on that wedge pattern.
Once I see it breaking my wedge pattern, that's where like I'm really interested, and that's where like I'm ready to go, and that's where you can see the volume come in as well. And that's why I use the 2 minute candles, just because it's a lot. I feel like it's a lot smoother, and you just really have that confirmation.
I understand that, but you didn't show us the break where it was significant. So the point of reading the tape is to go find the moments in the trade that are most significant. So if you're showing us this wedge pattern, which is a good wedge pattern, you're doing a good job of showing this wedge pattern, you're basically saying, if we get below a price in the wedge, I'm going to short it. And I thought what you were saying to me is that's below 47.50 here.
Yeah, it is. It's below 47.50.
Okay. So then when we put up the reading the tape.
Oh, well, I'm sorry, you're talking about the actual price?
Yeah.
Oh, it's probably around 47.25.
Okay. So,
yeah.
Anyway, so when we put up reading the tape, we want to go back and watch that specific moment.
Okay, I'm pretty sure that's it. I don't know.
Go back and watch it.
Yeah, hold on.
Go back and watch it. So you're saying it should be. You're saying it should be 47.25.
Yeah.
Okay, I understand. I'm a little bit older, but I can read the numbers.
Okay.
I can tell you that it was below 48.25, which was the break. So play it back. Go ahead. Okay, so we got below that 48.25 area, which is a little bit of an area there.
Well, that's the break right there, and why is it different?
I could definitely see that break based on the chart that I'm looking at there.
See, right here, that's. So
I can look at that and say, hey, if it got below 48.25, that would be sort of the bottom of that range.
Yeah.
It's not really a wedge pattern, it's more of a breakdown trade. Okay, so anyway, and then so show me your wedge. Now go back to your wedge pattern again.
So on my.
I mean, that's significant. I mean, if you were to ask me to sit in my seat, and I use 2-minute charts a lot, as well, and you were to say, take a look at this stock. If it got below 48.25 and 48.50 and had some decent volume and the tape was weak, would that be meaningful to you? Yeah, it would be. Sure.
Yeah, I messed up. I'm gonna be honest with you. I messed up. I just realized it's not the right spot.
Yeah.
At all.
That's what I was trying to say.
I apologize.
Okay. So, all right. So, but you did a good job showing the wedge, and then for your records, that's a really good best practice, which is you want to go back and look for the moment where it really does break and watch to see if you can pick up the nuances on the tape for how that breaks. All right, moving on.
All right, so for technology, I use several things, several different sources for my technology. First thing I look for in the morning, look at is the S&B scanner. This is where I pick out the stocks that have a high R-vol and are either gapping up or down significantly. Next, I head over to briefing.com. This is where I search and read the news for each of the stocks that I find from the S&B scanner. I look for keywords like full year and quarter guidance, beats or misses, upside or downside, and then I decide which stocks I believe have the best news catalyst. Then I head over, that's basically where it gives me my morning setup. And every now and then I'll look at the S&B radar if I don't really see anything that's catching my attention. But in the S&B radar, I either look for stocks that are in play, anything that has a price spike, and this is actually usually in the middle of the day as well, where it becomes very useful. Anything that's strong or weak, and anything that's trading with the market in either an upward or downward trend to see if there's anything setting up. In the morning, we share our AM ideas and we have a meeting. I post my trade ideas to the sheet every morning, but I also like to read everybody else's to see what someone else might have and see if they have the same idea. They have the same stock idea, but maybe a different trade. And then I look and see if there's any other ideas that might interest me in any other different stocks. I set alerts for important prices for stocks in my basket. I use my checklist app, helps me determine when I should take a position. It helps me gauge my risk with the amount of checks in my favor, but also prevents me from missing any factors I should be taking into account for my trade. And then building scripts, this is something I just started learning through Python, so I'm kind of just diving headfirst into that. Recording my screen and reviewing the tape with every trade. Obviously, since I was not in the Novavax trade, I do not have the tape of that, but I do try my best and missed that completely. And trade review and my daily report card, recording my trades daily and reviewing the stats to figure out what my best trades are and how I can be better at them. All this combined, I feel, does give me my edge when I am trading.
Okay, I'm going to give you 8.5 on that for where you're at. If you were an S&B intern as opposed to an S&B training student, we'd want you to really be doing more on the building scripts side of it, but you're not, and so we don't expect that of you right now. But guys internally who are interns are going to be building some scripts to help them to find more ideas like that. But pretty solid for where you're at.
Thank you.
You got it.
So for my trade review, as I mentioned, I missed this trade. I was trading another stock at the time, which also happened to be a wedge consolidation play, though just not as exciting as this trade. The wedge consolidation or big dog trade is so far my favorite setup. I'm getting better at spotting them sooner, and I have been working on a systematic approach using the checklist, charts with different time frames, and specific indicators for making the best trade possible. One thing that I'm working on as well is creating a watch list for the basket of my stocks, basket of stocks. I realized that when there's a significant news catalyst, I should be adding the stock to my basket of stocks and continuing to check them every morning for any further changes in fundamentals and technical patterns beyond a 2 or 3 day continuation trade, and even if they're not exactly the most well-known or exciting stocks. And then that would obviously lead me to a better stock selection. As had this been in my basket of stocks, this would have.
So what's your solution for not missing this stock next time? Is that it?
Putting it in my basket and following it. Yeah,
Okay.
I kind of was under the assumption that just having a basket of stocks was just kind of like stocks you maybe liked, or that was maybe had a flashy name like a Tesla.
Yeah.
I really didn't consider the news and just following it and seeing how it develops.
Okay, I'll give you an 8 on that out of 10. I'm not hearing anything riveting or extra detailed from your trade review, but also fine for where you're at right now.
Thank you.
All right, diligence of presentation. We're going to leave that for the end. We didn't go over your trade management. I thought your hypothetical trade management was pretty solid. I like the way that you took a look at that. I think that's an 8.5 out of 10 for where you're at. Can you go back to big picture? You didn't have a slide particularly labeled technical analysis, which I'd like you to do next time. But I think you actually did that. I think you just called it the big picture. Yeah, so I think you kind of put it here. So you want to have a slide that shows the technical analysis from a daily chart for Novavax and show us where it is in relation to the daily chart. So hey, it's fallen off from here, and this is what it would look like if we had a daily chart up. And then, so you want to have that longer term technical analysis slide. What you do here, you just don't call it you just don't label it. And then you want to have that intraday technical analysis slide and showing important levels in that. I actually think you did it. I just don't think you labeled it. Okay, so we're gonna give you an 8, and next time you'll label it correctly. Does that make sense?
Absolutely.
Okay. Yeah, but I think you did it. I think I like for people to be clear at what they're doing. So understanding what the long-term chart says and labeling that is important, and then understanding what the intraday chart says from a technical analysis standpoint is important, and I want you to be clear about that. It'll make more sense as you get a little bit more experience, because there's going to be some trades you actually just take because of technicals. And so if you are taking the time to mark them on other trades, it's just going to be easier for you. Your skill is going to get developed better for those trades, for those pure technical trades. Does that make sense?
Yes.
Okay. Trade strategy, you actually talked about a potential trade strategy in here, but I would really love for you to be more clear about what the trade strategy is for lots of reasons. Like, for instance, go to the title slide. All right, so the title slide, you call it a second day news catalyst trade, a day 2 news catalyst trade. And then at the end, go to the end, you call it a big dog trade, okay? Yes. So those are different trades. Those are both wonderful trades. And so go to the beginning again. So if we're going to make a second day news catalyst trade, that level that you pointed out, can you show me that level from day 1? Remember we talked about you had a trade decision there from the support from day 1? Yeah, that's a bigger deal. I keep going. It was trade management. Yeah, you got to make a trade decision there. If this is a second day news catalyst trade, you're taking off probably half or a third at that support level from day 1. And for you to get in where you got in, it's got to be a really tight consolidation trade. For you to be shorting that above that important level from day 1, you gotta have a lot of stuff. Like, you wouldn't really get in there that often, and you'd need a tight wedge pattern. You'd need a big dog tight wedge pattern to take that trade, and then you'd want to make a trade decision at day 1 support. And so the point is, a day 2 news catalyst trade it has very distinct variables relative to an intraday big dog consolidation trade. They're separate trades. So, for me, if I'm taking a day 2 news catalyst trade, I'm gonna say, all right, I'm probably only going to take that unless it's below day 1 support. I'm probably only going to take that if it's at day 1 resistance. Or I'm going to take it if it's just super weak intraday. I can control my risk, and it's like particularly meaningful if it gets below a day 2 level, which it is because of the big dog consolidation trade. And so I'm going to say, all right, my trade strategy is I got to just see something special, and if I can control my risk, I'm going to give it a run. I'm going to make a trade decision at support from day 1, and I'm going to let the rest run, and that's going to be my trade. Does that make sense? Yes. And I'm going to train and study and prepare based on that, and that specifically. Okay, so that's why I think there needs to be a slide where you lay out exactly what you're trying to do and exactly what the trade is and exactly what the variables are and exactly what your risk management is. Jeff says this all the time, right? He says catalyst trade setup. We want a slide like that. Okay. All right, so I think you kind of did a little of that. We're going to give you a 5 on trade strategy. I gave you a 5 on reading the tape. Diligence of presentation, we're going to give you an 8.5. So you needed to get an 80. So we're labeling you in the junior intern category, and the junior interns need to get 80 or above. Okay, and so we got you at 79.2. Well, we did expect this to go poorly.
I didn't.
That's not that, so that's, you're close. You're close, so we'll see how you do next time.
Much better.
And you caught a little bit of a bad break with the tape.
Yeah.
And you can clean up this other stuff, so we can get there. We can get there pretty quickly to get above 80. But there's a lot of good stuff here.
Thank you.
Yeah, good stock selection, really good with intraday fundamentals, a lot of good stuff here. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.